Hi traders, welcome to my video on Fibonacci arcs. I'm going to show you how you can use Fibonacci arcs to help you capture moves such as this one for over 500 pips and counting. This is the MetaTrader 4 MT4 platform and a US dollar Canadian dollar 1 hour chart. Okay, you can use Fibonacci arcs on any traded instrument and any chart time frame, so Forex, cryptos, commodities, stocks, indices, etc. I prefer the longer term chart time frames, such as the 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find signals tend to be more reliable. Plus, this also means less time chart watching and gives us the opportunity to capture big moves like this one. So, Fibonacci arcs, we're just going to insert Fibonacci arcs, okay? And this is how I trade them, okay? It may not necessarily be how others trade them, but this is what works for me. So the first thing I do is I mark the high and the low. So there we have the start of this downwards move here, and then we mark the low. Okay, so we would have been somewhere around here. We've marked the high, we've marked the low, and then price starts moving up. Price starts to make these higher lows, so we know that the market is perhaps beginning to turn around to the upside. Okay, and this is where the Fibonacci arc levels come into play. So we have the 38, the 50, and the 61. Okay, so what we're going to do is we're going to watch how price reacts around these levels, okay? And we can use them either for trading breakouts or trading pullbacks. Depends if you want to be more aggressive or perhaps more conservative with your trading. So the first thing to do is to wait for the price to creep up. Reach around here, you can see the first Fibonacci arc level, and price does actually break out. This could have been a potential entry, albeit an early entry into this uptrend. Okay, had we taken that entry there, I would have put my stop loss below the low here. Okay, so around 40 pips. And if we just zoom out, you can see that just zoom in again, gone a bit farther. That particular trade there would have been a good entry into this move. Could have almost bagged 600 pips. I would have used a trailing stop as well. So initial stop loss below the low here. Then as price started to move up, I'd just be moving my stop loss first to break even and then just keeping it below the lows, below the low, below the low, below the low, below the low. We may have been taken out here when price turned around. Still, we would have banked a few hundred pips. And we could have always looked to re-enter up here with another Fibonacci arc entry. So let's do that. Let's check our Fibonacci arcs. Again, same principle. So we can do the high to the low, probably more like here, I'd say. Okay, so you could have traded the breakout here, okay? Breakout here, stop loss below the low, and then you could have been in this move for over 200 pips as well. Simple as that. Okay. Going back to this initial trade, as I said, you can use the first level. You can either enter straight away as soon as it crosses on a breakout, or you can perhaps wait for a pullback. Okay, so you see the price breaks out here and it has a pullback to this Fibonacci level. So some traders may have waited for the pullback to here and entered on the pullback, the bounce off this Fibonacci level. You can see it actually acts as support. Okay, that just shows the power of the Fibonacci lines when they're drawn correctly as well, because they can be open to interpretation. Okay, some traders may have, drawn them from there to there, there to there. I mean, even there, you can see how well that 38 level holds up as support. Okay, and even the 61 as resistance, not just here, but later on, support, resistance. Okay, and that's not just coincidence, is it? Could be, but again, it's open to interpretation. Some may draw them with the recent move, some may draw them further back, some further back still. However, the same principles apply. Okay, we're trading in direction of the trend. That's the key thing. So we wouldn't sell in this instance. We're not going to sell against the trend. If you're counter trend trading, by all means, you could always try and sell around these points, little reversal trades. But I think it's a bad idea. You're going to probably eventually end up, well, you're not going to make as much pips, in my opinion, and be possibly risk having your stop loss taken out multiple times trying to trade against this. So if we trade with the trend, that gives us the edge, and then just time our entry on a breakout of the fib level or a pullback. Okay. So that resistance level holds up quite well. We do actually have a breakout here. However, with this particular trade, I probably would have wanted to wait for more of a pullback. Okay, something like this. See that deep pullback we have there? Okay. And then when that pullback happens here, we can look again for a breakout of the 38 level. Okay. Breakout, 38 level holds up as support. Continuation, then you see the 50 level here. Acts as resistance, becomes support, so we could have traded either the breakout or the pullback there. And finally, the 61 level again, breakout, starts to act as support. All indications, potential entries into this trend, okay? So Fibonacci charts can be powerful to help you mark key levels. You don't necessarily need any other fancy indicators. You can, of course, just plonk a moving average on your chart if you wish, to help determine the trend direction. I mean, I personally wouldn't, I do think you can just look at the market, mark the higher lows or lower highs in the downtrend and see which way the market is going yourself without needing to rely on a potentially lagging moving average, but each to their own. Okay, so I'd be looking at candlestick patterns, if anything, just seeing how the candlestick patterns are around the areas of support and resistance, because this can help to give confirmation for a trade. Okay. And also support and resistance. I mean, I actually would prefer to trade support and resistance than use this Fibonacci arc. And why is that? Well, I don't know. I just feel like it's more logical in, like, I have this move up here, okay? I can draw this resistance here. And for me, a breakout of this resistance, that would make more sense than I can't say random Fibonacci lines, because there's obviously some meaning behind the sequence. However, I wouldn't necessarily not trade because it's not bang on a Fibonacci level. I mean, here's an example. Like, I can see that the market is going up there. There's a resistance. I can trade that breakout. Okay. I can see this move up here. I can see this pullback, and I can trade that breakout. Resistance becomes support. Okay. Move upwards, pullback. I can trade that breakout. Resistance becomes support. Okay. There's no coincidence you get these big breakout candles. Okay. Obviously, you don't want to buy too high. You don't want to buy at the end of a move. Okay. You can just wait for a deeper pullback and then a continuation. Okay. So potentially up here somewhere. But ideally, you want to get in as early as possible. In fact, this perhaps is too early. A lot of consolidation. Yeah, probably here would have been sort of where we'd be looking. But let's stick to Fibonacci arcs for the purpose of this video. So let's take it. How we could have taken any of these entries, as I said, but then also we can update our Fibonacci arc as we move along. Okay, so we can move it to, that's just my trend line. We can move it to the most recent levels. Again, same thing, recent high, recent low. Okay, and then you can just wait. You know, we're in this, market's making these higher lows, so we're in an uptrend. And again, see how it reacts around these levels. I'll zoom in for you here. Okay, so a big breakout on the 38 level, which then holds up well as support. Okay, breakout of the 50 level. See, it acts as resistance, the 50 level there. Then it acts as support there. I mean, is that just coincidence? Like, it's almost bang on that level. Okay, it's almost like a self-fulfilling prophecy, Fibonacci numbers. And then the breakout of the 61. All opportunities. But as I said, you could have just, I mean, we could have seen this pullback here and just manually drawn us resistance level, which comes support there as well. Okay, that way we get more flexibility as well. Okay, but yeah, ample opportunity to get in on this uptrend. Using the trading stop, of course, to maximize the move as much as possible. There's fans floating around up here. Let me just get rid of that. Okay, so trailing stop, as I said, stop loss tight below the lows. Okay, if you took any of these breakouts, stop loss just below the low. Okay, and then we'll trail the price just to maximize the move as much as possible. If you do get taken out prematurely, for whatever reason, perhaps you panic, say you entered here, you know, you had a 20 pip stop loss, the price went 80 pips, you jump with joy, you've made 80 pips on a 20 pip stop loss, 4-to-1 risk to reward ratio, happy days, but you've just left all of this on the table. Okay. You know, if you capture big moves for hundreds of pips, you can afford to be wrong, you know, plenty of times. If you're taking 20 pip stop loss, if you take 4 stop losses in a row for 80 pips, but one big trade for 600 pips, you're going to make back that loss and then some more on top. Okay. So it just emphasizes the importance of money management. You can have the best entry signal in the world, but if your money management is poor, it can bring your trading strategy down. Okay, if you do get taken out prematurely, you can re-enter. As I was showing you earlier, there's opportunities for re-entry. Just be wary, the more you re-enter, the more you know you've got a chance of perhaps taking not the best entry like this. You don't want to end up buying at the high or selling at the low. For some reason there we go. Okay, so with the Fibonacci arc as well, let's just go back. As I said, open to interpretation. Perhaps not enough price data within there. You want to sort of look for big swings. Something like this up here. We just insert Fibonacci arc. So we do from the high to the low. And the same principle again, you know, zoom out, we look at the bigger picture. We are in an uptrend. There is a downtrend there, but we know overall we're in an uptrend. I mean, we could be trying to capture a new downtrend there. You know, there's no harm in that. Okay. If you think that the market's going to fall, you might be looking to do that. Just make sure you've got sensible money management in case, you know, this happens, it turns around. Let's just say, for example, you know, you thought there was going to be a new downtrend here and you shorted on that support level. When the price started to come back like this, at the very minimum, I would have moved my stop loss to break even point. So if price does continue up here, it's like worst case scenario, break even. Okay, but best case scenario, price continues to drop and you can get into a downwards trend, just like we had this upwards trend here. Okay, but we'll focus on the uptrend. So we drew our Fibonacci arc, high to low. Okay. And then we wait for price to go up, see how it racks around these levels. Okay, more of a fake out there. So we could have waited. You could have even taken that trade. I mean, to be fair, you could have taken it, stop loss below here. 35 pips, not ideal, but not the worst in the world. Otherwise, you could have waited for the confirmation of the trend upwards. Okay, and then taken one of the next breakouts. Okay, but again, when there's lots of consolidation like this, it's just hard to differentiate, I feel, between you know, where the support and resistance level should be. I mean, I would personally much rather just draw my own. Okay, like I could see here, that is probably, bearing in mind this is a 1 hour chart, so there's 1, 2, 3, 4, 5, at least 5 hours there that's shown to hold up. Okay, so that for me would be valid resistance. You can see once it's breached, pull back there, it becomes support. But you still could have traded any of these Fibonacci level breakouts. Okay, let's have a look. What do we have here? I'm not too sure if I would be too keen on this because it's just a lot of consolidation going on here. You see, we do have these spike upwards, but with all of this, I'm going to want to see more of a move beforehand. That being said, you could still have entered on the breakout there of the 38, even the 50 and the 61. Okay, the only problem is we had this big deep pullback here. Okay, and again, we get another opportunity along here. So breakout of the 38, the 50, and the 61. If you were waiting for a pullback, you would have missed out on these two, but you perhaps on 61 could have got in on the pullback around here, which is perhaps the more conservative trade, but you also could have just drawn your resistance level there. Okay, consolidation, got a bullish flag pattern there. overall trend is up, market's making these higher lows. So we don't need to necessarily overcomplicate things with fancy Fibonacci levels. You could have just traded that breakout there based on support and resistance and trend lines. Okay. Let's see how the fans fared here. Sorry, the arc. Don't know why I called it the fan. I do have a video on Fibonacci fans as well. I think this is the one we were looking at earlier, wasn't it? Let's just mark the high and the low there this time. So the market's making these higher lows. We draw our Fibonacci arc, and you can see it actually holds up. When price starts rising here, it does hold up as resistance, breakout, then it holds up as support. So, you know, this is an example of it actually working good. We're not going to get it right all the time, which is why we have sensible money management. Cut losing trades short, let winning trades run. Because when you do eventually get into a move like this, where we trade that breakout, probably wouldn't trade that because we've just had that big move upwards first. I would have waited for a pullback. Okay. But yeah, we could have had our stop loss just below here. And over 200 pips profit potential on that move. Okay. If you missed it, you can always wait for a pullback and just enter on a breakout of resistance into the trend. Okay. Resistance comes support, either the breakout or the pullback, as you wish. Okay. Can mark these all off. Buy in here, probably going to be buying too high. Okay. So yeah, that is Fibonacci arcs in an uptrend situation. Do we have a downtrend we can look at? Here's one. What would we do here? Should we give it a go? Let's Fibonacci arcs. So I'm gonna draw it the other way. Got there eventually. It has been a long day, but there you go. So you mark the high and the low. Okay, and then these act as resistance levels. So we have the pullback here. You can see downtrend, pullback, 38 level, can enter there. Okay. And again, same situation. You can see, mark that move there. Open to interpretation. This is why I'm not a massive fan. However, you can still use either of these as resistance. Thing is, you know, if you see in that first example, we use the 38 as the turning point. Okay. If you use that every time, you get in situations like this where the price will break and it will test the other ones. Okay. But then you get instances where it'll only test the 38. So that would have been the entry opportunity. Nonetheless, even if we had taken that trade on the pullback there, we still could have had our stop loss above the high there. So 30 pips would have kept us safe, and we would have caught this nice move downwards here, you know, over 300 pips. Again, trailing stop, so stop loss above the high initially, and then we can just keep it above the highs as the price drops. Okay, just locking in profit, and we would have more or less caught all of this move until we see the market start to make these higher lows. We could have manually exited the position. Okay, so really open to interpretation. You know, would you draw it there? Would you use this high? Would you use this high? Okay, would you use this high? Do you see what I mean? It's really open to interpretation, which is why, in my opinion, this is better. Resistance, markets moving down, support, breakout, sell trade. Okay, whether you want to draw your support like that, or you want to draw it on an angle. Okay, M pattern there, breakout to the downside, potential trade opportunity. Okay, same scenario here. Okay, M pattern breakout, support becomes resistance. In fact, here, M pattern, breakout. Okay, pullback, breakout, support. This is actually a good level of support. As you can see, it goes back to here. Support, 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 breakout, support becomes resistance, enter on the breakout or the pullback. You missed that one, not to worry. What do we get? We get a pullback, support, support, breakout. This support then comes resistance. We didn't need a Fibonacci arc to tell us that, did we? No. So yeah, just trend line support and resistance and trend trading really. Pullback, breakout. I mean, this is a 1 hour chart. So, you know, if you try doing this on the 1 minute and 5 minute, it probably won't work as well. Not to mention you won't capture bigger moves because we've got lots of price data. I mean, you know, if you do something like this on the daily, you can capture some moves for months. Okay. See, price drops, support, support, breakout, even, you know, all the way down this trend, there was these opportunities. Support, breakout, support becomes resistance, continuation, M pattern, breakout to the downside. I mean, I'd much rather that than each to their own, you know. You know, however you want to trade, you can trade, but I like to maintain control over my support and resistance levels. Although the Fibonacci, if you play around with it long enough, it'll probably pick the perfect levels, but is that coincidence or not? Who knows? Okay. Trade what works for you. Practice on a demo account. Good money management. Cut losing trades short. Let winning trades run. Capture a few big trends like this and we can be up overall. Have good discipline. Don't let fear, anger, greed get in the way. Don't FOMO, fear of missing out. You know, price is down here and you've seen this big move and you want to get in and you sell at the bottom. Definitely don't want to do that. Don't revenge trade. Okay, don't sell at the bottom. Then price moves up and you think, okay, it's up here now. I'm gonna sell again higher, and then it continues to move up. Okay, it continues to move up, and you're just chasing your tail trying to sell. Okay, have a plan, stick to it, good discipline, controlled emotions, and you can be a successful trader. Thanks for watching. If you could like and subscribe, that would be great. Hope to catch you on the next one. Take care.